Okay, testing. 1, 2, 3, testing 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly in your
By
pounds.
2020, there will be over...
Yeah? All right. Wonderful. Hey, good morning, everybody. Welcome to Trade Non-Farm Payrolls Live 148. Holy smokes. Thank you, FX Street, for hosting for over 12 years. We're coming up to Trade Non-Farm Payrolls 150, pretty close. It's not far away. That's pretty exciting. So anyways, imagine that, 148 months in a row we've been doing this webinar. How exciting is that? Anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So just looking at the chat over there, good to see everybody. I know many of you have been attending this webinar for 5 or 6 or 7 or 8 or 9 or 10 years, maybe 12, I don't know. Nice to meet you, by the way. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. I'm here today to earn your loyalty and respect. I'm also here today to teach you how to be an independently thinking foreign exchange trader that doesn't have to listen to a talking head like me, or even the ones on TV, or especially the ones on TV. I want you to be able to analyze the market technically and fundamentally and make your own decisions so that you can be a hero to yourself, to your family and your loved ones, to your friends, and one day perhaps to your clients. So Traders Way would like to be the prime broker for your successful Forex trading business. So we're going to start by investing time and energy into you up front. With that being said, I've been sick for 2 weeks. It's a long time to be sick, especially for someone that never gets sick. Turns out I have bronchitis with a touch of pneumonia. But I'm here anyways. I'm here for you. However, I found it difficult to get through an hour webinar every day. So every day that I've been sick with pneumonia, I've done my daily webinar because I love my clients at Traders Way. But getting through 2 hours seems like something I haven't been able to do since getting sick. This webinar today is 3 hours long. I may not be able to do it. I just may not physically be able to do it. Silly bronchitis, right? So I will give you 100% today. It just may not be 3 hours. That just may be more than 100%. So I hope you understand. Silly bronchitis, silly pneumonia. But we'll get through to today together. I will rely on your strength. Yeah, and coffee. So we'll do our best. So an hour until the news comes out, and then maybe I can get another hour after the news. And then we'll see how it goes from there, huh? Is that all right? Take your rest. Yeah, well, I've been sick for 2 weeks. I got 12 hours of sleep last night. Yeah, and I'm tired now. So anyways, enough of me. Let's talk about you. All right. How many people are new to this webinar or new to my trading style? Let me know. It has nothing to do with my cigars. I hate when people say that. It's bronchitis, bro. It's not a cigar. It's a virus that's gone. Well, how do you get bronchitis? You get the flu, and then the flu turns to something else. But anyways, yeah, FX record is. Yeah, sure. Shut up, guys. Shut up. Stop it. Anyways, what I'm trying to get to is that many years ago, when I was just promoted to vice president of my venture capital firm in San Francisco, which had about 300 employees at the time. They just made me VP, and I had to make a decision. Do I stay in this firm doing the job I love and aspire to up my professional career to become that position, or do I quit and become a Forex trader? So sure enough, I quit the firm and became a full-time Forex trader. After a short amount of time, I actually started struggling, and I wondered why I was going through a rough patch of trading. And I realized I wasn't looking at my trading like I did everything else up to that point, and that was to look at it like a business. So I said to myself, well, if I was managing a startup, what would I do in a situation like this? And I said, well, I'd go on a business planning retreat, and I'd need to make sure I had a good plan. And I realized making as many pips as possible every day isn't actually a plan. Okay? What am I taking for it? Nothing. I refuse to take medication. I'm too strong for that. Although that's what Steve Jobs thought too, right? Anyways, so anyways, I went on this business planning retreat with myself, and I came up with a credo. I wanted to start with a credo, like, what am I, who am I, where am I going, that kind of stuff, right? Very, very high level stuff. And what I developed after many hours of thought was that my number one goal was simply not to lose money. It wasn't to make money. It was just don't lose money. And, you know, I liken it to sort of inventory. You know, money is my product. Money is my service. Without money, I'm not really a Forex trader, right? So anyways, so I created this idea that my number one goal every day was capital preservation. Then, once I decided that, you know, if I was going to pull the trigger, I needed to make sure I could easily hit my minimal acceptable performance. It's kind of like quota if you're a salesperson, right? Let's say if you're expected to make 10 sales, your quota might only be 2 or 3 sales, because that should be super easy to do. And if you can't hit your quota, you're in trouble. So anyways, a minimal acceptable performance after analyzing my trade history for me became 15 pips. And the way that this math worked out is that I should only pull the trigger if I felt very, 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 very confident I can make 45 or 50 pips. Okay. If I can't easily make 50 pips, I shouldn't even pull the trigger, which is an important thing here, or maybe even here, right? As a currency trader. And the idea is if I'm taking shots that are worth 50 pips, I should be able to lock in 15 easily every single time. And that on the long run, these little winners, when my trades fall apart and I'm wrong and they collapse on me, I mean, even if I get it wrong, I should be able to make 15 pips, right? You know what I mean? Right? Like if it's worth 50, I should easily make 15 even when I'm wrong. And that's really what it came down to. But more often than not, if I can make 15, so let me back up a little bit. I analyzed my trading history and I looked at the history, and it seemed to me I could make 10 pips just on luck, and it could get to 9 or 10 pips and then totally collapse and lose 25. Right? I'm looking at a lot of trade history here. It seems to me like I could get up positive 8, positive 9, positive 10, and then it could just collapse. And I kind of got the profit was basically luck. It was just part of the noise, statistic noise. But I didn't want luck in my trading. But I found if I could get past that level, if I got to 15 pips, almost always I went to 30 to 50. And that if I got beyond 15 pips, it wasn't luck anymore. It was a good trade. There was no statistical noise. I got myself in a good trade. So I realized that 10 pip area was very, very important. So that's why I came up with map of 15. I knew for me, if I got 15, I'm definitely going to get 30, but probably even 50. So I should reverse engineer the whole thing. Only take trades that I feel very, 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 very confident I'm going to pick up 50 pips. And to me, that's sort of a intraday trade. That's like a New York trade. That's like a London Open. You're going to make 50 pips, and then it'll only take a couple hours, and then it'll pull back, right? And by then, I'm already up. So anyways, if I can get the 15, which means I move my stop to plus 15, so now my worst case scenario is map. It's not my target. It's my worst case scenario. Then I'm going to let it run as far as I possibly can. So if it's an intraday trade, I'm going to try to get the 50. If it's a day trade, I'm going to try to get 100. If it's a weekly trade, I should get 300. Right? And that's where all this comes from. Now, going back to my old FX Bootcamp days that had a military theme, think of being in active combat. What's your number one goal every single day? Your number one goal every single day is not to do something stupid and get yourself killed. Right? The second mission of a warrior in active combat is to achieve the mission. Whatever mission they've been given, achieve the mission. You have to achieve the mission. Along the way, not getting yourself killed. Right? And then, of course, the third overriding big, hairy, audacious goal is to win the war. And that's what these three things mean. Okay, please take a screenshot. I wonder if it'll let me post that in there. Not very well, but if it's the market, then how can you be wrong? I'm not sure what you mean, Harley. I must have missed an earlier comment. Okay, good. So now you got that. That's my chart set up. AH says, I can't guarantee 1 pip every trade I do. No, of course not. But when analyzing your trade setup, like to qualify, to add a quality label to the trade setup you're looking at, you should be able to predict how many pips are in the trade potentially. So if you took a cross or a double bottom, all that kind of stuff, and you're buying at support, you should be able to identify the next level of resistance and how many pips away that is. And if it was 18, 19, 20, 21, 22 pips, I would let it go. I wouldn't take the trade. Okay. Thank you, UK Kenny. K-Dog says, I'm a beautiful man. Thank you. So that's what I'm trying to say to whoever said they can't guarantee a pip on every trade. Well, no, that's not what I'm trying to say. What I'm saying is if it doesn't look like it's worth the risk, then don't take the shot. You should be embarrassed not to get 15 pips on a 50 pip potential trade, right? Another way of looking at it is that if you got rid of the mediocre trades, because I think that's where life and death happens as a currency trader. I bet you if you're struggling with break even, like you're basically a break even trader, the trick to becoming profitable isn't more profitable trades. The trick is less mediocre trades that give you losers. You'd be surprised, one less losing trade per day over the course of a year adds up, right? Because now we're talking about hundreds of less losing trades. And very often the losing trade was just sort of a trade you threw down because you're like, oh yeah, well, this will work. But you didn't take the next extra step and really kind of analyze the market. You were just kind of going with the flow. And to get to the next level, very often, the slight difference is one less mediocre trade per day makes you quadruple profitable. Okay, so I don't have a drawing tool, so I can't draw in here, but imagine you had, how would you determine it? How about 150 pip winning trade, one negative 15, one negative 15, one negative 15. So you have 3 small losers and 1 decent winner. Well, you're actually break even. So something to that effect might describe your trading over the long run, right? 1 decent winner and then 3 smaller losers. You don't have any bloodbath trades, which is good, but you're stuck in this break even situation sometimes for years. And the first step to profitability isn't a second 50 pip trade. It's one less mediocre loser. Now, maybe you're not hugely profitable, but you're on your way. And by the way, making money is a big confidence boost. Even if you're not making significant money, but every month you're up 1%, it starts to feel good. And by the way, 1% profit per month is what Bernie Madoff was promising his clients, and that was enough to get people excited. People with money were excited to make 1% a month consistently over and over and over in all situations. Another way of saying it is maybe that's all you need. Maybe you don't need 10% per month. But anyways, let's get to this. Technically, we're looking at a 2155 EMA here, and I look at this as a way to define whether the market is bullish or bearish. So the 21 is below the 55. Technically, it's bearish. So I'm probably better off looking to sell than buy. Cool. Because the market is bearish. But I notice here that there are times, quite a bit of times, where I'm getting green candles and prices rising. So the market is bearish, but price is rising. And very often that's an opportunity because if price is rising, it's going the wrong way. If price is rising, it's going against the falling market. And it occurred to me very early on in my career that I'm probably better off selling in a falling market than rising. So a couple of things here. I look at the angle and separation. If they're far apart, I'm aggressively bearish. And if they're narrow, I'm conservatively bearish. Okay? But I still don't know when to sell. So I need a trigger. And that's what this is, the 5-8 cross. This says sell. And you can see the market was already bearish. So this is a sell. This is a take profit. Okay? That's a sell. That's a take profit. That's the 200 EMA. I call that the fair market value. So you can see price is significantly below the fair market value. And that's because the market is bearish. Generally, that should be the case 99% of the time. But every so often, you're working your way back to this fair market value. And in that case, it's a target. And then if price gets to the 200 EMA, the market is neutral, and I don't know who's going to take over, bulls or bears. I don't know. I don't have any information. It doesn't mean anything to me. Once you're there, it doesn't mean anything. If we're retracing back toward it, it's a target. When we get to the 200 EMA, Nobody's in control. It's neutral. The fair market value is where bulls and bears agree. So very often you can get some messy trading there, and I'd like to stay out of that. Bollinger Bands are a sign of volatility. Sometimes I like to look at it as volume. They're set at 2 standard deviations, nothing proprietary. I use oscillators. I speed up the stochastics. I slow down the MACD. And you get a typical chart. And then I'll take this information and I'll spread that across multiple time frames. Typically a 5-minute chart, a 15-minute chart, a 1-hour chart, and a 4-hour chart. And you get something that looks like this. Okay. The one other thing I add to my charts, especially the longer term charts, I add weekly pivot points and I add monthly pivot points. There you go. Oh, for sure, eh? Boy, I'm trying to pace myself. I can feel I can feel it. Joe says, what's the average % return per month of an institutional Forex trader? In the United States, according to Barclays Hedge, if you return 2% per month on average, you are one of the best foreign exchange traders in the United States of America. 2%. Remember, that's compounded monthly, so that's not 24% per year. That's probably closer to 35. Or 30, probably closer to 30 because it's compounded. How do I determine them? Pivot points are standard operating procedure. They look at the previous period. So let's say you're measuring yesterday. You're going to do a daily pivot. You look at yesterday's high, you look at yesterday's low, and you divide by 2. Is that correct? If I look at yesterday's high, yesterday's low, and divide by 2, what do I get? I get the average. I get the 50%. That's not what pivot points are. So pivot points are sensitive to what happened yesterday, not just yesterday's range. It's not a midpoint. It's interested in the psychology of yesterday's market. So if yesterday's market, let me get this out of the way. Monthly. I guess we got to go this one. Okay. So what it does, instead of giving you a midpoint, it looks, so let's go back to this day. It looks at the high of the day, the low of the day, and the close. So now there's new information here. And what it's looking at is the psychology of the market. Yesterday had a high, yesterday had a low, and the close was lower than the open. So you could even go open, high, low, close. And what that does is tells you that the market was bearish at the end of yesterday. So if yesterday ended bearish, today will probably continue to be bearish too, because trends tend to last. Of course, it's not always, but that's what's built into the algorithm. So this is a central pivot, and you can see because of this low close in the previous period, the pivot point moved from here to here. It moved down, suggesting bearishness. So these pivot points, today's pivot points, okay, are looking at yesterday's high, yesterday's low, and yesterday's close. Now, it closed low yesterday, which really brought this down. Typically, you know, you get let's say a high, a low, and then a retracement, but it's not even retracing. So you get a high, low, and a low close, and moves the central pivot down. Okay. You see that? I also do that on a weekly basis because I love swing trading. Love it. I love swing trading. Anyways, one of the things you can do with swing trading is look at last week's high, last week's low, last week's close, calculate the pivots, so on and so forth. Okay. Now that hasn't been trading very well, but maybe if you go to a different pair, we can go to pound yen. You can look at this. Okay. So swing trading predicted this up into here. And then swing trading predicted this from here. Actually, it only predicted this move. It didn't predict that low. So I'll put that there. Okay. That's a weekly swing. I have these fat gray and black areas. Those are the monthly swings. The monthly swing predicts this. And so to get these numbers, I look at last month's high, last month's low, last month's close, divide by 3, and you get the new monthly pivot. Okay? So again, daily pivots, especially if you're intraday trading, which I do a lot less these days. I'm too old. Weekly swing trades and monthly swing trades. Okay? And if you don't know how to swing trade, I highly recommend you visit fxbootcamp.com, sign up for the swing trading course. That's probably 15 hours, maybe 20 hours of video training. And then the swing trading, live trading group starts in a couple of weeks and runs to the end of the year. But you can't join the group unless you've passed the class. So anyways, lots of good things there. So that's how pivots work. Let's go back to this. Wow, my mouth is like super dry. All right, so let's go over the scalp quickly, and then we'll prepare for the news. I published on FX Street several years ago now a very, very detailed overview of how to prepare for and trade non-farm payrolls. It includes a scalp, a high volatility event-driven strategy, and a counter trade based on key levels of support and resistance. And you should be able to find that on fxstreet.com. I'm assuming you read that. Took a few hours of my life to write that for you. So anyways, we're going to let the news come out on a 1-minute chart, and I don't care what the number is. So what are we expecting? $1.98? We're expecting 3.9 on the unemployment. Great, fine. Oh, wow. Okay. I don't really care what the number is because we've been trending so well. I understand the macro scenario that we're in. Great. Or even the micro scenario that we're in. So it's not likely to be radical today. Great. That being said, I'll let the market decide whether this is bullish or bearish. It's not for me to say. Okay? So I look at the 1 minute chart, and then if it's initially green, 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 according to the rules of the event-driven strategy, we're going to buy a dip. If they're red, 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 red in the first few minutes of the post-news release, then we're going to look to sell a rally. Is it right? Is it going to be right? Is that the right thing to do? Look, all we're trading is the volatility. We're not trading what the news means. We're not trading the fundamentals. We're not making a long-term investment. It's a scalp based on volatility created by a news release. That's all it is. It's nothing. So all you can do is follow the rules of engagement, and one of two things are likely to happen. You're going to lose a little bit of money, or you're going to make a little bit of money. And that's that. So in this case, if it goes green, 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 we're going to say, oh, good. If it pulls back, we're going to look to buy it. Somewhere between the 382 and 618 Fibonacci retracement. So if you get a big 1 minute red candle and it drops right into here, pull the trigger. Click. Your stop goes right below this, and you're risking about 20 pips. You lose more than 20 pips, you've done something wrong, it's your own fault, nobody cares. If you can't follow instructions or you lack discipline, you're going to be punished, and that's how the world works. Namaste. Oh, you like that? You see that? It's actually grown in now almost a week. My wife looked at me and said, don't do that again. Anyways, pull the trigger. Great. In this case, it went a little bit lower, but you noticed it didn't come down, knock you out. Your stop should be just below this 148.50. Cool. And then after a few minutes, 1, 2, 3, 4, 5, after 3, 4, or 5 minutes, you should be able to move your stop to break even, or you've probably already lost money. But again, you only lost 20 pips. Who cares, right? Which pair? This is a PowerPoint chart. It's not a pair. We will get to that. Okay. So after a few minutes, we will move our stop to break even, because I call this the line in the sand, and there's only two outcomes here. It's going to break and you make money, or it's going to collapse on itself and you will get knocked out or break even. Okay. I feel the urge to do the scene from The Jerk, but it's not culturally sensitive. So anyways, so yeah, in this case, it breaks. Boom. And why did that just go full screen? I don't know. Okay. Cool. Okay. So that's all it is. You're either going to lose a little bit of money today, you'll either break even today, or you'll make some money today. That's the scalp. Now the counter trend is it goes up or down to key levels of support and resistance, and we will counter trend it back to the middle. So we want to find extreme lows or extreme highs and counter trend that. This will be the 1 minute. When the high volatility events-driven strategy comes out, we're not going to wait 20 minutes for a 5-minute chart to set up, or even probably more like 30 minutes. We're not going to wait 30 minutes for a chart to set up. Okay? We're going to wait 3 minutes or 6 minutes. Okay? That way, if you lose, you only lose a little bit. It's a scalp, guys. Come on, it's a scalp. Okay? It's a scalp. Now, very often, history will repeat itself, and the same thing if it trends. Now, we're in a month where we're not trending, but anyways, typically in a trending market, what presents itself on the 1-minute chart will also present itself on a 5-minute chart. And then you'll find at the end of the day, it will probably present itself on an hourly chart. And that's the fractal nature of the market. Okay, we have about 15 minutes. Cool. It's messy, I know. There's a big story behind that. Gold, oil, what should we look at today? One of the things we could look at is these yen pairs. On Monday, Traders Way clients. By the way, if you want to work with me every single day, it's absolutely free. Visit tradersway.com and open up an account. Even a demo account is fine, and you can access my daily webinars. But on Monday, or even Friday of last week, we had Kiwi yen rising up to this red zone from down here. This is the beginning of the week, so this was a buy. And then we said if it hit the target on Tuesday or Wednesday, then we would sell it. As you can see, I already drew it back here. We could sell it for a counter trend opportunity. If it happened Thursday, we would not do it, only if it occurred Tuesday or Wednesday. And that was on Monday's plan. Is there anyone here, any Traders Way clients that can confirm that we talked about that Friday and Monday, that Kiwi yen would rise, and then if we hit the red zone on Tuesday or Wednesday, we have an opportunity to sell? This says it right here, Kiwi yen, Mahendra. Thank you for your patience with me today, guys. You know what? I'm going to bring up Trade the News so that we can listen to the release when it comes out. We're still a few minutes away. So anyways, if you guys want to hang with me every day and get setups like that, just open an account at tradersway.com. Take you like 30 seconds. I'm not joking. Okay. So that was Kiwi yen. And then I thought Beast was similar. Yeah, you can see it here. So I set it up on like a 15-minute chart and an hourly chart. Some of this is messed up from higher time frame stuff. Let's try to get this to like a 4-hour. Anyways, what you can see is we had the up off the bottom and then a sell off the top. Can you see that? Up and down. So again, we set it up on multiple time frames. You can see it here. This is the buy on Monday. You said if it hit the red zone on Tuesday or Wednesday, there'd be a counter trend trade. As you can see, we have it up and down. That's what this means. Okay, up and down. But I did it on a smaller time frame too. If I click in, one of the things we talked about is how do you actually trade it, you know, and there's the up into the resistance. And then I pre-planned it back here that it would rally up, double top. See how I drew this area here, right? It'd double top, and then you'd look for a lower low, lower high. So you could trade this, or even more likely, and that's what that big ellipse was, you're probably selling this because the typical setup is the double top, which is 1, lower low, which is 2, and then the 3 of a 1, 2, 3 is the rule reversal. But anyways, because this setup on a Tuesday or a Wednesday, you have the counter trend trade, which says down. Now, I can only predict that it goes back down to this black line. The fact that it went even farther down to this line, it doesn't mean it can't do it. It's just I can't predict that. But this all does mean down. All of this does mean up. And so, again, we talked about this on Friday and Monday. So I don't know what that was. 150 pips up and then 150 pips down. Good job. Ciao. Okay. So again, if you like that type of trading, swing on by Trader's Way. Completely free for clients. Tradersway.com. Let me check the time. Sorry, I feel like I'm already running out of energy. I apologize for that. But let's get ready for euro dollar. I guess we'll just trade euro dollar today on the news. Fundamentals are important. I spend a lot of time on fundamentals. Joe says, I almost wonder what the fundamentals. Well, okay. Joe brings up a point. If technicals are that powerful, why use fundamentals? Because fundamentals tell me what I'm going to do 2 weeks from now. Fundamentals tell me what I'm going to do at the end of the year. Fundamentals are, I'd almost say more important than these technicals. Now, these technicals look powerful, but they only tell me now. They don't even tell me why. So if they only tell me now, they're just telling me price and time in which I want to do what I want to do. Well, how do I know what I want to do? Pivots don't tell you to buy or sell. You have to understand that. So where people go wrong, maybe the other thing where people break even for many years, they're really good at technical analysis, but they break even. It's because they're looking at technical analysis to tell them what to do, and that's not what technical analysis does. Technical analysis identifies levels of support and resistance based on price action, and they tell you time. That's all these charts tell you. Time is on the bottom, price is on the side. If you know you're a bull or a bear, then it makes trading so much easier. If you know you're a bull, you're looking for technical setups at support in which you may consider buying if you get the right price action. But it doesn't tell you you should buy. That's what your job is as a professional money manager, whether it's your own money or someone else's money. Your job as a professional money manager is to make the decision to buy or sell, but your charts don't tell you to buy or sell. They just tell you price and time. So if I've decided I want to be a bull, then now all I need to do is find support and then line up my price and my time accordingly. I know I'm a buyer at support. I know I'm a buyer of dips. I know I'm a buyer of retracements. I know I take profit at resistance, for example. Okay. So fundamentals are more important to answer Joe's question. Okay. But once you've made that decision, trading is much easier. Not that you're going to be more profitable. Trading will be much easier if you know what you're going to do before you're going to do it. So you say, well, Wayne, how would you possibly know what you're going to do before you do it? Well, that's what a trade plan is. That's what a trade bias is. A bias for a currency based on long-term technicals, but more importantly, fundamental analysis, things like macroeconomics and central banking policy, right? Once you've made that bias, that determination of you think you want to be buying or you think you want to be selling, and by the way, this bias could last at least 3 months. could last 6 months, a year, 2 or 3 years. I mean, they're long term. You don't change them that often unless the central bank has changed their policy. So once you've determined your bias, it's so much easier because you know that you're a buyer today, you know that you're a buyer tomorrow, you know you're a buyer next week and next month. So if you know you're a buyer in October, what are you doing today? Well, you're a buyer today, but what if you're in a bearish market, but you're a buyer? Well, you should probably buy less today, unless it's at hardcore support. You should probably buy things like double bottoms with higher highs. You should be more conservative in your entry. But when the market goes from bearish to bullish, you should be more aggressive in your entry, but at least you're buying all your trades, and all your trades you're buying at support. You understand? And everything else is closer to playing a video game. Boo, 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 look at me. I buy, I sell, I sell, I buy. All right. All right, so I'm going to move this to the 1 minute chart. I'm going to change this to a more typical template. Come on. How much time? Still a few minutes. I'll put tradethenews.com on. Thank you, FX Street, for hosting again. What does this green area at the bottom mean? What does this mean? On Monday, we determined that this was the projected low for the week. On Monday, it's Friday. On Monday, we had this as the projected low for this week. Cool, right? It's not a buy zone. It's a take profit zone. The other thing, on the last day of July, bears had this as the best selling price you could possibly imagine. Nothing up here was better. Nothing down here was better. On July 31st, we had this as the best possible place to sell euro dollar if you're already a bear. Now, imagine that you were also up here. Pretty obvious resistance. But besides that, it's monthly M3. So whoever shorted there, their target is down here. So don't be shocked if we head down there next week and then try to turn our way up. Yes, we'll do gold later, we'll do oil later, we'll do the rest of the majors, and we'll do the yen pairs. Okay? So going back to this, I'll put that on a 4 hour. So that puts your brain in context of where we are and where we're going. 1 minute. I'm going to put this to a 15-minute chart. Okay. Let's test trade the news.
This is a 24-hour live broadcast test channel from the Trade the News broadcast network. If you are hearing this message, your sound card and network configuration are working properly, and you are now ready to listen to our other voice channels.
Okay, remember the rules of engagement. Be careful here. Also remember this webinar is probably a 30-second delay. So be careful with the reaction. Make sure you're trading your charts and not mine. And once again, if you could, please visit tradersway.com and open a demo account. You can do an ECN account. You can do a variable spread account. You can do a fixed spread account. Fixed spread is probably good if you want to scalp, for example, because then you never get hit by widening spreads around news releases. Also, if you open an account at Traders Way, you have free access to my daily webinars that we do live every single day. And we'll set up swing trades a lot. I'll teach you how to trade on your own, so you don't need
a minute now to the
like
data
me.
Change in non-farm payrolls for July. Expected 193,000. Prior was 213,000. Unemployment expected to drop 0.1% to 3.9% for July. Private payrolls expected 190,000. Also get U.S. trade balance data for June expected minus 46.5 billion. Canada merchandise trade for June expected minus 2.3 billion. Reminder for the jobs data in ADP earlier this week had a better than expected 219,000 versus 186,000 expectation.
Yeah, ADP was good.
Said that they were seeing no tariff impact yet on the jobs data. So about half a minute now to the payroll data for July expected 193,000. Unemployment expected to slip 1/10 to 3.9%.
And thank you again for your patience with me today with my bronchitis and pneumonia. I'm a little slower than usual, a little less rah-rah. So again, thank you for your patience with me. I appreciate it. Okay, it's a miss.
Below the 193 expected. Back
it's
on
a
the rise
miss.
up to 248,000 from 213,000. Unemployment at 3.9% is in line with expectation. Private payrolls at 170,000 is 20,000 lower than expected, but the back month rised up from 32,000 to 234,000. Manufacturing payrolls at 37,000 above the 25,000 expectation. Back month rise a little bit lower to 33,000. Trade balance minus 46.3 billion, slightly lower than the expectation. The back month rise to minus 43.2 billion from minus 43.1 billion. Canada international merchandise trade at minus 0.6 billion versus minus 2.3 billion expected. And July payrolls lower than expected, but offset by upward revisions in the back month. Unemployment at 3.9% as expected. Hourly earnings at 0.3% is in line with expectation. Back month rise to 0.1%. Year over year, 2.7% is in line. Weekly hours in line at 34.5, with the back month rise up 1/10 to 34.6. Labor force participation in line with the prior month, 62.9%.
So it's not crazy bad or anything. Most of that stuff is fine. 157. Let me break it down a little bit. Manufacturing jobs increased. I guess Tesla's hiring in their factory, right? Last month's NFP was raised higher. Remember, they have an extra month to do their analysis.
Treasury futures have drifted towards the upper end of what's been a tight range after the unemployment rate came in
move
line.
your stock to break even.
Payrolls number missed, and the back month manufacturing payrolls showed some strength. The back month was revised notably higher to 248,000 from 213,000.
Remember to move your stop to break even at this point based on the PowerPoint that I gave you. Remember, it's just an opportunity. Just an opportunity. You want a free look from time to time. That's what this should be. Remember, I said when it gets to the line in the sand, it's either going to break or it's going to completely collapse on you. That's why when you get to this scenario, your stop should already be at BE. It's just a shot at the net, doesn't mean you're going to score. But imagine your coach, right? If you got a free look at the net, you need to shoot. It's not fundamental analysis. It's not a long-term investment. It's nothing but a high volatility event-driven strategy. And you're probably being knocked out now. There you go. You're probably knocked out.
Seeing very little change, if
That's
any.
why
in
we
the
have the rules
futures
of engagement.
contracts for January 2019 is down a half a tick now, following the data. The U.S. bond market's holding near session highs, but very light, moderate trade, up a tick only in the 10-year. The yield just below 2.98%. Dollar is modestly lower. The euro holding near session highs 115.93.
I would have hoped it went up a little further and then fell.
The dollar index is in the red now, was up about 15 cents ahead of the number.
So it didn't even hit hardcore resistance and fell, so it's really wimpy.
Gold futures are getting a bit of a bid as well, following the job report in the positive territory, 12.21 now in gold.
Okay. What would the target be now? Well, in that case, it would have still been resistance. So really nothing's quite happened yet. So we can flip to the 5-minute. It doesn't mean this is dead. It just means that scalp, based on the rules of engagement, has lived its usefulness. But on a 5-minute chart, it can still do the same. Remember how I told you that it'll probably repeat itself on a 5-minute chart and then repeat itself again on a hourly chart? What you don't want to do is sort of say, I'm going to treat this like every other trade. I'm going to treat this like a well thought out, fundamentally based strategy where you're like, I've decided to buy it, so therefore I'm going to hold it. It's just a scalp, bro. Okay. Some people still might try this, which is fine. But what you don't want to do is get caught in the middle, right? So identify areas you'd like to buy, identify areas you'd like to sell. I think this one's pretty cool from pivot to pivot if we got something like that. Okay. Right now, we're still in the sweet spot from the initial trade. So that whole repeat itself on the 5-minute chart is what's happening now. Okay. So it's your call, bro. So let me redraw this one. Somebody's doing this. Now, what if you're a bear on this? I find this trickier if you're a bear. You shouldn't be a bear on a higher high on a small time frame. And you shouldn't be a bear in the green zone. Okay? You know what I mean? I'll be there for you. These 5 words I swear to you. When you breathe, want to take a look at some other pairs. Let's just move a little bit. Very little reaction here, or here, or here, here. This has a little bit of dollar weakness because you can see at least here sort of neutrality, here slight yen weakness, I guess here slight yen weakness, but then you look over here and then strength again. So yeah, mixed bag here. You can see the Asian currencies are doing well. Aussie and Kiwi are beating yen. I'm hoping the yen follows the yuan, but we're still a couple of weeks later. So that whole discussion I had earlier about the swing trading group that I meet with, I think the best trading of the year is about 2 weeks away. At least that's the start of the hunting season, per se, where you start hunting big game. So I usually start the 3rd week of August. Sometimes it happens early. Sometimes it doesn't happen until September. If it's an election year, sometimes it doesn't break out till even November. But most years in situations like we're in now, trading gets really, really good about the 3rd week of August. Now, you might not know it at the time, but we're going to start setting up some big trades. And by big, I mean 1,000 pip trades. I'd like to set up 5 or 6 trades that are, 1,000 pips each or more. And the type of trade that you can add 2 or 3 times. So instead of 1,000 pips on one trade, maybe you can get 3,000 pips on 3 trades, right? So all of that's going to start in the next couple of weeks. So again, I'm hoping in that scenario, the yen follows the yuan, because the yuan's got some interesting things going. So if you're going to join that group, make sure you visit FX Bootcamp now, fxbootcamp.com, and finish the swing trading course. Oh, speaking about courses, I forgot. Man, this pneumonia is killing me. maybe
Emerging Market News out there, July Consumer Conference from Mexico.
I forgot to mention. So I asked new folks here, if you're not a part of the Traders Way family, please visit tradersway.com. The big benefit is that you get world-class customer service and quality spreads and such, but also I work with you every single day. All of that's good, but also in the next few weeks, as soon as I'm healthy again, I'm going to do a 5-day workshop to teach Traders Way clients how to day trade. It's a 5-day workshop, and that's, again, completely free for Traders Way clients. In that case, you have to have a live account, so pop, $500 in or something. But if you want to attend that coming up, please visit Traders Way and open an account. Kashif Khan is up $1,200 and $550 on gold, huh? Very nice. Gold seems like a strange one to trade, but I guess if this is moving on dollar, why don't we go back to look at gold? I had gold sort of with mediocre setups. So let's take a look. Back this out. I have to go to a daily chart. Yeah, so I have gold here. You see that? I have it on this sort of really here, this kind of stuff. You see, follow the line. Here. It's definitely at support. yeah, Lester. So more than. So Lester, I gave one out like right before I went to Harvard. And you didn't get that one? Yeah, Kutsi, it doesn't actually matter. I just suggested you don't have to put in 5,000 or something. The important thing is you show that you're committed, you know, you're part of the family. Just pop some in there. You missed it? Try Summer 999. That might still work. That'll save you like another $400 or something. Yes. Yeah, oil. So I'm looking at gold now. I'm just trying to show you that this is obvious support. Okay. But it hasn't set up yet on a daily basis anyways, right? So remember, if it hasn't set up on a daily basis, it's going to behave the same way you see on an hourly chart. It's got to repeat itself on a daily chart. So a conservative trader would say, okay, we're at support, but that doesn't mean you buy it. So what you would like to see next, if you're a buyer of gold, is let's say like a double bottom. Wouldn't that make you feel a little more comfortable? And then a higher high would make you feel even more comfortable buying a higher low, right? And then on a daily chart, what you'll find is it'll probably work over the course of time. Let's say work its way up here, and then there'll be some sort of news, and it'll bring you way back here over the course of a few days or a week, and then you'll get a double bottom and a higher high here, and maybe this is the month of August, right? So if you thought this was the month of August, up to the central, down to a double bottom, up to the M3, down to the central, and then breakout, let's say this would be more realistic, right? If you're a bull on gold and you thought it was going to move this way, then you should incorporate all that thought process into what you're doing now. So it would go up, and even though you just made a ton of money very quickly, you should realize that that was a high risk trade, and that the velocity of it going up means it's going to have the similar velocity coming down. That's a fancy way of saying you should probably take the profit when you can. And if you're so gosh darn bullish, you can at least wait for the next dip, maybe on Monday, and then buy it again on Monday and ride it up for a few days to the next level of resistance on a higher time frame, which is probably 1233. In which case, you should probably take profit again and then look for a decline and so on and so forth. So if you're going to start trying to reverse the market, remember that it's going to take a while to reverse this bearish market on gold, that it's not going to just instantly flip. Okay? Right. So here's someone says we're at a role reversal right now on gold, and that is true. I've already marked it up. I marked it several days ago, in fact, so it shouldn't be shocking. See this area here? Pachow, 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 pachow. In fact, I think I can bring it up a little more, kind of like that. Okay, would you agree that this, and this was support? This, and this was support. So now, dropping into here, you would assume that this area should act as resistance. So this whole move that I just marked out, Come on, gold. This whole move that I just marked out is a great place to start assuming the first the first drop, and maybe you get your double bottom off of that, right? Down and then up. Okay. The point is, this is a high risk, so you should only assume it's going to go to the next level of resistance, then drop. But if you're that bullish, remember, before the market turns bullish, it's going to need to form a reversal pattern. This is not a reversal pattern. A double bottom would be a reversal pattern. An inverse head and shoulders would be, it's basically a long drawn out double bottom. It's a upside down head and shoulders, right? Does that make sense? Okay, we had a question about oil. All right, so let's do this. This is a long story. So going back to April, we had oil rising to 72, and then once it got to $72, it should move sideways. That was in April. By the time June came along, we were basically at 72, and it's retraced ever since. I guess actually it hit it. And by April, I mean April last year. Sorry. April last year. So by April this year, we hit our target. And then it's moved sideways ever since. Back before I went to Harvard for summer school, the trade plan back here in May was to prepare for oil to rally up, probably head up to resistance, then probably drop, because remember, this is back at the end of May, that it should probably rally up and then probably drop significantly back into this potential neckline, which I've identified here. And then it would rally up and then potentially drop off the right shoulder of this area, which would potentially get us down to this next level. Now, all of this was done in May. I know it's August now, but that's how I left it May. So through May and June, it rallied up. It did make the higher high. And then from June down into July, it did make the significant retracement. Then I get back from school, and I said, oh, look, there's the head and shoulders. So now that we're down here, it should rally up somewhere into this gray area and then potentially drop back down to this. And so far, it's kind of done that. But we're in the time of year where these trends start to turn. That has to do with the hunting season I talked about earlier, where you stop trapping rabbits and you start preparing for, hunting moose and caribou. So this in here can get choppy, but nonetheless, this whole pattern still, you want to try to let that run through if possible. Okay. So if you're a bear on oil, you're in next week's sell zone. Okay. This move here, you'll see we hit our target on Tuesday or actually Wednesday morning, which means you set up for the counter trend trade, which means it gets you back to the central pivot, which we then did. And now really you're setting up this week's trade. So if you were looking at this on a smaller time frame, which is now an hour, I know this is messy, but look, we've been using this chart for a couple of years now. I'm kind of committed to the mess. what I'm trying to say is if you are a bear on oil, this is the sell zone for next week. Let me highlight it. If you want to be short all next week, somewhere in this gray zone is where you want to sell. And that's where we are now, is all I'm saying. Doesn't mean you sell now. It means you start setting up bearish trade plans if you're a bear. Maybe this double tops, or maybe that opens up like this on Monday, attacks 69, and then collapses. So maybe you want to be short at 69. And 68.5 is also valid, right? Because it's in the gray zone. So wherever you kind of get your entry, whether it's Friday or Monday, if you're a bear, that's what you want to set up. Okay. That's right, fxbootcamp.com. Yeah, look, I know, Con. I know this one's messy. I admit it. But again, this chart, we've been setting these trades up for a year and a half, Con. So this is a lot messier than a typical chart. So I understand how messy they are. But again, some people only make trades based on small time frames. This is something we've set up for years. And kid you not, back in April 2017, we were buyers and specifically had a target of 72. It took a year to get there, but it went up almost every day. And then when we got there, it stopped going up. So there's a lot of analysis that goes in there, okay, Con? But I know it looks, right? I get it. I get it. I know. I'm right. I'm not defending it. I agree with you. It's just how that turned out. Okay. USD CAD we had coming down, maybe looking for a support, a small rally, and then a drop. We kind of got the small rally here. It was very quick, and then that was that. The target for the month of August is down here. Okay. Now, you'll see these rallies that I drew back in July. Why would I have it making a lower low and then rally into this gray zone? You see this gray zone? You see this orange line, how it comes up to this pivot here? What that's predicting, if you don't know how to swing trade, let me explain. This pivot is telling me that X. Therefore, all this other stuff is seen through the lens of heading down to that X. Hassan says, can we be a bull in oil? Let's go back. Okay. Let's go back. And let's look at this. Yeah, zoom out. Okay, well, the first thing that goes into oil is not technical analysis. So like, I think it was 2 days ago, I was reading the monthly EIA report. Okay. So I'm reading EIA, IEA, and OPEC stuff. That's the first step, right? You need to know inventory and other type of supply data. That's supply side. Do your supply side analysis using EIA, IEA, and OPEC. By the way, all three organizations have websites. All three organizations have quants and economists and analysts. And they all produce reports and they all give them to you for free. So it's like you have 3,000 quantitative analysts working for you for free, all with PhDs. You have 3,000 PhDs working for you for free. Do you take advantage of it? I don't know if you do or not. But all you have to do is go to the IEA website, the EIA website, the OPEC website, download the reports, and do your own analysis. That's supply side. On the flip side of that is demand side, which comes from global macroeconomics. You want to look at the economic data out of Europe, the economic data out of the United States, and the economic data out of China. I think those three would be enough for you to get a good idea of demand for energy. Okay? That's demand side. So if you spend some time doing demand side analysis and supply side analysis, you should be able to come up with a pretty reasonable ability to forecast future moves in oil, because now you have supply and demand. Okay? So the first step is you do that. Then the second step is, if you think oil's demand is going to go up, then oil prices are going to go up and you're going to be buying oil. But if all that does is tell you if you should be a bull or a bear. So I would like to buy oil. Maybe not today, but I can say, you know what, I want to buy oil. So then that simplifies my life, because now I can say on this chart, you know what, I'll clean this chart up. You know what, I'll clean it up. I don't need all that old stuff anymore. I'm going to clean this up. Ready? Boom. Cool. So now I can tell myself I want to buy oil. Okay? If I were to buy oil, then where is support? I have that as support. Okay? And maybe I'll drag this up. Okay? Could I buy there? Yes. Okay. Based on this move, could I buy a retracement of this? Yes. Great. So that's just one setup. This is a bounce and then maybe a follow-on. Great. That's one whole setup. Oops. Now I've got to back out. What if it falls further now? Where's the next level of support in which I might consider buying oil? How about like this area? Cool. Done. You see what I mean? Now, when will it hit this price? I don't know. I have no idea. I don't even know if it will fall. What if it just keeps going up from here? Cool. Well, then I just have to, once we're up here, I have to then pay attention to technical analysis, right? But you see how everything starts first on doing the fundamentals? Look at the EIA, IEA, and OPEC for supply side analysis. Look at Chinese data, look at European data, look at US data. That will give me an idea of macroeconomics, which is demand side. I combine supply and demand, and I come up with, I'm either a bull on oil because demand is going to go up, or supply is going to go down, right? Or the opposite, I'm a bear. So I'm either a bull or a bear. That's all the macro does. The second half of the year is going to be good. Yes or no. The rest is fairly easy. If I think the rest of the year global growth is going to slow down, therefore global demand for oil is going to slow down, then all I have to do is identify the closest two levels of resistance in which I want to sell oil. Is that quarterly or for the year? I tend to like, I'm looking at the rest of the year as one chunk, okay? Okay? Great. Now, if oil rises, will that be good for the Canadian dollar, or will that be bad for the Canadian dollar? Well, again, we don't know. but we would assume it would be good for the Canadian dollar. So now I have a bias for the Canadian dollar. If I thought oil was going to go up, then I would say that should be good for the Canadian dollar. And maybe I want to sell USD CAD, but maybe I don't want to trade against the dollar, the Canadian or the US dollar. So I might say, well, based on my analysis of the EIA, IEA, OPEC, US, European, and Chinese data, I have decided I want to be a bull on Canadian dollar because I believe demand for energy, the energy complex, will be up. So oil prices will be up, exporters of oil will benefit, and therefore the Canadian dollar will benefit. Great. So now I've done my analysis of all that, and I could say I am a bull on the Canadian dollar, and specifically against the Japanese yen. Why? I don't know. I just randomly picked one. So now I can do the simple job of looking to buy dips. Therefore, where are the next two levels I can consider buying the CAD yen? How about this? And how about this? So my trade plan based on all of that analysis is buy a dip after the higher high. Wow, how shocking. Wayne, you're a genius, a genius. Yeah, okay. If that don't work none, then if I can get a reversal pattern down here, I'll trade the reversal pattern. The only thing is it changes my expectations because it looks more range bound. So I'd probably trade it like this if that were the case next week or the week later. But right now, that's only plan B. Plan A is buy this dip. Plan B is buy that dip. What about selling? I'm a bull. There is no sell. Why? Because I analyzed all that other stuff. So if you're not doing stuff like that, guys, if you're not analyzing macroeconomics, if you're not analyzing supply and demand for commodities, then how can you estimate whether a currency is going to appreciate in value or depreciate in value if you don't know why money is going to cross a border or not cross a border? Because that's all we're doing as currency traders, is making decisions whether money is going to flow to a country or be removed from a country. That's all we do. It's pretty simple. You accurately predict the future every single day. Oh, yeah. Well, I guess that is difficult. But that's what you do. And whatever you're doing now is probably more complicated. If you're like, well, Wayne, I just like the 5-minute chart. I like scalping 15 or 20 pips at a time from the euro dollar. Scalp, scalp, scalp. I never risk anything. I'm in and out. I never have big drawdowns because I'm not in the trade long enough. Okay, great. Fantastic. You will definitely not lose a lot of money quickly. You'll never make any money either, but good job. You're doing everything you can to avoid doing the hard work. The hard work is doing the analysis and turning that into a decision. But once the decision is made, I think everything is relatively easy because you know you're a buyer, right? You know you're a buyer if you're a bull. Why are you a bull? Because you did so much research. Great. So if you're a bull now, what do? Buy at resistance? You buy high? No, that's for foolish real estate brokers. So what do you do then if you're a bull on a currency? You buy low. Every retracement you buy at support. Oh, well, what else do you do? Nothing. I don't do anything else. If I'm a bull, I buy retracements back to support. Well, how complicated could that be? Okay? How complicated could that be if all day, every single day, you say to yourself, I'm buying at support every time CAD yen retraces? Okay? I bet you anything what you're doing now is way more complicated. Yes, the market is definitely consolidating now because that's part of seasonality. I told you probably 2 and 3 and 4 and 5 months ago that it would be like this. And here's the funny thing. Most people will start getting lazy and lethargic because the market is consolidating and they say to themselves, it's not doing anything. You can't make money trading Forex. Look at it. Look how quiet it is. Look, right? Meanwhile, you're missing the whole point that it's not going to be like this in 3 months. In fact, it's probably not going to be like this in 3 weeks. And therefore, you should probably be setting your trades up right now while everyone else is whining and crying. You should be doing your job and setting up some trades. And I'm telling you, if you're part of my swing trading group, we're going to set up some big trades. The only thing is, I don't know if the market's going to give it to us. I'm not in control of that. But this is the time of year you need to be sharpening your saw. Because it's going to get weird. It's about to get super weird. Hassan, I don't think your bias should be set monthly. Do you think macroeconomics change monthly? No. So here's a great question for you, son. Is the world going to be a better place 1 year from now, economically speaking, or in a worse place 1 year from now, economically speaking? That's your answer. Whatever you come up with, that's your bias, and that'll probably be what you do for the next 18 months. Cool. By the way, we've hit our target here for pound dollar. I was hoping this wouldn't be so bad, but you can see now we've double bottomed. We've hit the projected low for the week. So any swing trader that shorted it here, which is the basic weekly swing trade, the target for that basic weekly swing trade is this spot that we're at now. So any bull on pound dollar is going to want to buy this double bottom in hopes that it goes up like this. Okay. And the way that I had it drawn is if you were a bull earlier in the week, you would have bought down here, and that this area down here was the second area. Remember, I was teaching you if you're a bull, you set up 2 areas in which you would consider buying. The first one is this M2 here. Let me go back. Okay, the first one is this M2. That's where a bull would buy, and you would have bought it on Monday. Okay, and if that doesn't work, then you would be buying it down here. Okay. So if you think it's going to go back up next week, you should be probably setting it up now or be taking it on Monday morning. Okay? And anyone that was a bear, they're the ones that happen to be right at that moment. And that top predicts this bottom. So it was perfect. And you should be out of the trade now if you're a bear. And the understanding that you should be out of the trade now if you're a bear is what sets the bullish double bottom up. Okay. Now going further out, let's back way out again. Do you think it's going to go up from here or down from here based on like a month? Like let's say 3 months from now. What is that? October or November? Okay, October or November will pound dollar be higher than it is now, which is right here. This, right? Let's do it this way. Do you think we'll be up here in 3 months, in 90 days or 100 days? Or do you think we'll be down here in 3 months? That's called macroeconomics. Hopefully you have some intelligent reason why you think this, but maybe you're just a monkey head and just randomly came up with an idea. It doesn't matter to me, monkey head or genius, it doesn't matter to me. All I care about is that you have a bias. I really don't care how you get there, because half the time we're probably wrong, but we get the trades profitable, so we believe we're geniuses. It doesn't matter to me. As long as you have a bias, I don't care how you come up with it. So we're kind of down here now. So we're either going to go here in the next 100 days or we're going to go here in the next 100 days. I really don't care what you roll the dice, my friend. And if it tells you down, you should be selling rallies. And if you say up, you should be buying dips. And everything else is what a fool does. And my experience is when you ask a group of people, is it going to go up or is it going to go down? You'll find out it's 50-50. It's remarkable, but that's how the market really is. It proves that that's how the market is. So if you're a buyer, you buy a double bottom here, or you buy a higher high, higher low here, right? What do you do if you're a bull? You buy reversal patterns on the way down. Is that a reversal pattern? Yes. If you're at support and you get a reversal pattern, you buy it. That's your job. If you're at support and you get a reversal pattern, you buy it. And then after the reversal pattern, if you're a bull, you buy dips. Okay? And what if you're a bear now? Well, these bulls at resistance should take profit because they realize it's resistance. So they should be nervous there. If they're smart, they take their profit. So what does that do for you as a bear now? If you're at resistance and you get a reversal pattern, then you sell. And then after that, you sell rallies. Okay? You see, it's the same thing. It is the same thing. So all you need to do is make your decision whether you're a bull or a bear. Do your job. I'm telling you, even if you're wrong, if you do this, you certainly won't lose money. You probably will make a little bit of money, but even if you're wrong, if you're buying double bottoms at support, you're probably not going to lose money. If you're selling double tops at resistance, you're probably not going to lose money. Even if it drops for a while and then skyrockets, you probably will only break even. But even then, I've seen 1,000 million times that even if this is going to go down, 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 in this scenario, you probably make money. And you're wrong. But you're doing your job right if you're a bull and you're buying at support and you're buying dips after reversal patterns. Now, if you're buying dips and there's no reversal pattern, then you just don't know how to trade, and that's why you're losing money. But if the market reverses and then you buy dips, but it only reverses on the smaller time frame, but on the bigger time frame, it doesn't reverse, and it's just a three-wave correction then an expansion wave, well, then you'll make a little bit of money on the way up, and then it'll collapse, and then you won't get any entries anymore. You're a Turo, wants to open an account at Trader's Way with euros. Yes, I believe that is the case. I'm just a strategist, so I'm not a salesperson or back office person. So I don't know, but I can tell you if you go to tradersway.com and contact support, you'll find out that we have Ritz-Carlton butler quality service. Everyone wears white gloves. They'll open the door to your limousine when you pull up to the office. Give us a chat. Give us a call if you want, and we'll get you set up. So how am I doing as a guy with bronchitis and pneumonia? Am I hanging in there? It's amazing what 2 pots of coffee are doing. A, I feel a little bit better, but B, I might have to take a 1-minute break soon. La 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 la. Ba 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 da bum bum bum. All right, I want to go back to the yens. You are taking your med. No, I'm not taking meds. Meds are for sick people. All right. Yeah, my lungs actually are hurting. Pain in the lungs. We should go to the beast. Take a look at this. Fibbits. Wayne, please explain. All right. Fibbits goes back a long time. Oh, I don't know. 10 years ago, I'm guessing. 2018 now. No, longer than 10 years ago. Longer than 10 years ago. And by the way, this is going to be part of the day trading course that I'm going to do. Once again, a 5-day day trading workshop at tradersway.com. I'm going to do it in the next few weeks, totally free for all people with live trading accounts at Traders Way. So if you want to get a detailed version of what I'm about to give you, go to Traders Way. All right. Somebody asked about Fibbits. This has to go back. This goes back more than 10 years ago, significantly more than 10 years ago, when I was teaching people how to day trade. Okay? And there's a lot that goes into it. Some of it has to do with catching fades off of previous moves. It's kind of like pivot points. But it occurred to me when teaching other people that there could be some sort of overlap between pivot points and Fibonacci swings, because I use them kind of the same way anyways, right? Now I know pivot points help with targets more than Fibonacci, but the entry, the setup, if you will, of a lot of my trades end up inevitably being very similar. So I either hired somebody or asked Kurt Worley, who was learning how to type or program CTL, because this was a programming language for the GFT Dealbook 360, which we used for many years. But somebody on my behalf programmed an overlapping system for daily pivot points and Fibonacci retracement levels to help me catch the Asian fade. So I would fade off Asian moves. And that's all Fibots are a combination of pivots and Fibonacci retracements. And Garrett, that did the programming, was it Garrett? What's the guy's name? Wyatt, sorry. Wyatt that programmed these pivot points was an FX Bootcamper. So Wyatt went through and he programmed the pivots that I was teaching people, used the same colors and everything, and then also programmed the Fibots in there. So in the settings that he uses, it says what kind of pivot points do you want, but down here it's got a bunch of Fibot levels, and that's what Fibots are. So he's gone through and basically programmed stuff out of my training into his indicator, and it's beautiful. It's really beautiful. Okay, so that's what Fibots are. I don't tend to use them anymore. Not that they don't work. It's just, I don't know. They're obvious, I guess. But back 100 million years ago, back before anyone you knew, I mean, there was a time when the only person that used pivot points was me, except for a very, very small group of people. And I'll give you a funny story. I went to the 2005 FXCM Traders Expo in Las Vegas. I think it was the very first Traders Expo. Not Traders Expo, FXCM Expo, whatever it was. It was some expo that FXCM decided to throw. And so I did training there. I did a big workshop. I remember this. I did NFP for FX Street. And then with a group of people, we left my penthouse at the hotel, which was in the same conference center as the FXCM thing. And then we literally ran to the workshop that started like super early, like 7 a.m. Vegas time. And then I did a big workshop. But later on in the day, I did a presentation where I'm up on stage, right? And I got the projectors behind me and a room full of FXCM attendees. And the room was totally full when I walked in. And then I started the presentation, and then more and more people came in, and then people started sitting on the floor, and then people started like 3 people deep along the edges and about 5 people deep at the back. And then some people were sitting on stage with me because there was nowhere else to be. And then the crowd outside the double doors got so big, and I'm not joking about this, the fire marshal came in and threatened to shut down the entire conference unless they cleared people up. And my point is, my presentation was on pivots. And I did this whole thing, and the room just went silent, like, oh my God, I've been trading Forex without knowing anything about pivot points. And then I made some sort of comment, and someone raised their hand. They're like, FXCM doesn't have pivot points. And it was back then when all you had was your trading platform. And that was it. There wasn't anything else. Right? And so even with my GFT platform, I had to have them custom program and put in there. So I've been doing the pivot points for that long. And so it was really great for Wyatt later on when MT4 came together. I wasn't using MT4 back then, that he could program these and include my Fibots. But like I came up with the colors. If anyone else has ever called these green and red zones pivot profit zones, then they've learned how to do pivots for me, because I can tell you, I was at a Pete's coffee shop in San Mateo, California, when I came up with the wording pivot profit zone. So if anyone else has called it a pivot profit zone, that's mine. I should have called them Wayne McDonell pivots or something. I don't know, whatever. But it's been cool being part of a brand new industry. Amazing to see it grow and mature as much as it has. It's really an honor to be part of such a great industry. It's given so many opportunities for us. So, like, again, imagine having this as the projected high for this week, and imagine having this as a projected low for this week, and knowing so here. How awesome is that? So that's the power of pivots, but they don't tell you whether you should be a bull or a bear. Technical analysis never does. Dalton, how do you get into your swing trading group? You got to go to fxbootcamp.com. You have to pay for and complete the swing trading course. And once you've completed that, then you have to join the team at the same website. But you can't join the team unless you've completed the course. It's a prereq. Okay. Look, I'll tell you what. If anybody emails me, Wayne at FX Bootcamp, today and today only. Oh, it won't let me. Oops, remove any web addresses. Maybe it'll let me do this. Wayne at fxbootcamp.com. Let's see. Nope, blocks that. All right. If you email me, Wayne at fxbootcamp.com, I'll give you a coupon code that will save you several $100s. And you'll get, I don't know, 40 or 50 hours of training. Today only, now only. Wayne at fxbootcamp.com. Yeah, not even today. When the webinar's over, I'll check my email. If you've emailed me, I'll send you a coupon code. You got that? You can, I'll give you a coupon code for the whole package where you get all the videos for fundamentals, for technical analysis, for scalping, for spot trading, for swing trading. I'll give you everything. I'll give you several $100s off that. But thank you, FX Street. But that's it. Honestly, like, that's it. We'll call it a fire sale. Woo, look at me, marketing genius. But that's that. Thank you, FX Forecast, for the whole fire sale idea. All right, yeah, I'm a genius. It's a fire sale. Pa-chow, pa-chow, pa-chow. But only for the next 3-4 hours, guys. And then that's it. And I'm too sick to give you any other pitch. Okay. Wayne at FX Bootcamp. All right. If you want the day trading stuff that I'm going to do in a couple of weeks, that's free. Just open a live account at Traders Way. So I'm not trying to hit you up for money. Just fund a live account at tradersway.com. It could be $100 if you want. I don't care. When I'm healthy enough to do that workshop, you'll get the day trading workshop for free. All right. So anyways, I don't mean to make it a sales pitch. I'm just running out of energy. All right. Let's go. I don't want to do exotics today because it's too distracting. We've done a lot of other things. This is pound versus everything. Does anyone have a does anybody have a request for a particular currency pair? Again, I don't want to do exotics. I think it's a distraction. I mean, maybe the one thing I'm willing to do today is peso. Why don't we look at peso? Do I even have it on here? Well, it's funny. I don't even have it on here. I have everything else, don't I? All right. Well, I'll use this as an opportunity to teach you how to make a profile. I'm going to open up a random chart. And that one is the worst one, so let's do a different one. Yeah, Hassan, I've done yen pairs up. All right, this is okay. It's not pretty. This should be a 15-minute. Let's see how that looks. No, that should be 15-minute. This should be 5-minute. This should be 1 hour. That should be 4 hour. I'm going to change all these templates. Wow, my mouth is so dry. I guess all the liquid in my body is in my lungs. All right, so I've adapted this. So I'm going to show you something. I'm going to go and change this to USD Mexican peso. And what I'm showing you is how to set up a profile in MT4. So I'm going to go USD Mexican peso, USD Mexican peso, USD Mexican peso, and USD Mexican peso. All right, so now all of these are USD Mexican peso, but it still says I'm on Kiwi dollar. So I'm going to create a profile. I'm going to go to Profiles, Save As, and I'm going to call it USD. Let's see if you can give me an example here. Small USD. Okay, USD. Is there a... Okay, good. So I'm going to call this profile, this combination of 4 charts, USD Mexican peso. I'm going to save that. So now I can go to, here's pound dollar. So now it just switched everything over to pound dollar. Pound dollar, pound dollar, pound dollar, pound dollar. Down here it says pound dollar. And now I go to here and I have another one called USD Mexican peso. Now it'll reorganize these when I log out and log back in. But here's a new profile called USD Mexican peso. I open that up and now it's no longer Kiwi dollar. It's USD peso, 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 peso. But my USD, where's my Kiwi, where was it, USD Kiwi? Kiwi dollar is still valid. Kiwi, 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 peso, 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 peso. Cool. So let's expand this to a 4-hour chart. And on the last few days of the month, we're hoping this thing falls, and it didn't fall. And that's that. If we change the template here, let's go just monthly. Okay, check this out. June was awesome. That's the predicted high for June. That's the predicted high for May. That's the predicted high for April. Okay? This is the predicted low for March. This is the predicted low for July. How did monthly pivot points do? pretty awesome, isn't it? By the way, thank you for the little thumbs up on YouTube. I appreciate that. That's really cool. I don't know if you're on YouTube or FX Street. But pretty good, right? Okay, and if you don't know how to do that, that's part of the swing trading course that you'll learn. So, but peso did not move this. It did not move. If you are a bull on this pair, which means you expect the Mexican peso to fail, this is what's going to happen in the month of August. Okay. And this price that you have here, that is the best price you're likely to get if you're a bull. That is the perfect price if you're a bull in this pair. If you're a bear on this pair, you want to sell it here or you want to sell it here. Okay. And I have no other plans for this trade. Nothing else matters. Anyone can see. Oh my gosh. I'm schnookered, guys. Oh yeah, Hassan, you will get crushed on the interest side. So you will be paying more interest than you earn. But the thing is, although the interest rates are high in Mexico, they're also high in the United States. So it's not nearly as bad as other situations. Trust I seek. No, the other one was Queen. Sorry. Yeah, the other, you're talking Metallica. I was going to play it from over there, but I can't do it. Can't do it from over there. Hassan, you're losing such. So, I don't know. You're not losing enough on that pair to, to, what's the opposite of validate? To I don't know, override the opportunity. If you thought this was going up that many pips, right? Let's say, put it this way. If you thought you were going to make $1,000 on here, but you'd have to pay $22 in interest, would you really give it up? You're like, well, it cost me $22 in interest to make $1,000. I wouldn't worry about it too much because you're going to earn interest on the dollar, which is actually quite high relative to most central banks. I guess invalidate. Yeah, I guess so. Versus the peso. So the peso does, so it will cost you some money, but it's a cost of doing business. It's not a big deal. If it was like I don't know, a different currency pair. I don't know. I'm running out of energy. So anyways. Yeah, well, the reason for that is not just the interest rate. Oh. La la. What do you think? Is the trend up or is the trend down? Okay. What'll blow your mind, and again, I don't mean to make it a sales pitch. Oh my God, what am I going to do? I need to make it clear to you. So whether you learn from me or from someone else, or you do your own research, I'm okay with that too. The point of me saying this is I want you to be impacted enough that you do something and add this knowledge to your repertoire. But this sell is an obvious sell on this pair. This green zone is the obvious target in that situation. And the way that this set up, you should obviously know that this is heading back, not to this black line or that red line. The only thing I can predict is this black line. So this drop here to this bottom, to this bounce, to this price, which is what, 95% of that move, is predictable. This drop, this rally, and this stopping at this price is predictable. If you don't know why, then I've just shared something incredibly valuable with you that you need to go figure it out. So either you take a course at FX Bootcamp or from somebody else, or you read a book, or you spend time on your own, or whatever. You need to know this knowledge, that if you don't know this, there is a gap in your knowledge. That's what I'm trying to share with you. That this is predictable in multiple ways. That selling at this price, taking profit at this price, reversing in at this price, and taking profit at that price is all predictable. And if you don't know why, then that is an amazing piece of knowledge that you now know that you don't know. And that you should know. Okay? I think we did Kiwi yen. Let's do Kiwi dollar. Okay. Okay. So let's talk about this one. Wayne, is this the same that you just showed me? Well, this is a predictable sell. This is where you're supposed to take profit. But in this case, it's not supposed to retrace back to the weekly central. What's the difference? Well, if you don't know, now you know that you don't know. Now, here's the interesting thing. If you're still a bear, you should have sold already, front running next week's pivots. Because if you're still a bear on this, there are two places you should sell, here or here. Somewhere between those two is where you should be short. So what I'm trying to tell you is, if you're a cheeky monkey, you're shorting this move, which hasn't set up yet. It's supposed to arrive on Monday, so you might as well take it on Friday. Okay? You see what I mean? So I don't care how you know. That my point isn't to sell you a course. My point is, you now know you don't know, so do something about it. Okay? The overriding theme to this is this may not work. So if this fails, you say, well, Wayne showed me this over non-farm payrolls and it didn't work, so it must be phooey. It's not phooey. We're still in the middle of summer. This is still a sideways range. Okay. But nonetheless, if you were a bear, so here's the thing. If you're not a bear and you're not a bull, you're just neutral, and then you probably wouldn't take the trade. Okay? In that case, you'd be counter-trend trading yesterday, which makes sense to me. It's not the best counter-trend trade. I'd rather do it on a Tuesday than a Thursday, but nonetheless, that's what you'd be doing. But if you thought this was bearish on the long run because you did some sort of analysis like, right? Obviously down. So if you thought, well, that's going to continue, great. So now you're a bear. If you think it's going to continue down, that's bearish. So in that case, you'd be selling high. And then this time of year, you're expecting a breakout. So remember, I told you I'm expecting moves to come in the next 2 to 3 weeks. I don't know if they'll arrive, but that's what I'm expecting. Therefore, you could try to start front running here. You wouldn't do it in the middle of July, but in the middle of August you might. Why? Seasonality. There's a difference, okay? And if you don't know seasonality, that's something else that could be taught. And I cover that every single day at Trader's Way, so. Okay. Yeah, okay. Somebody asked, how do you have next week's prices if we haven't finished? All right. So how many hours in a trading week? It's a little more than 5 days, right? It's basically 5.5 days. 4 days is 100, 125, so 130 hours. So we have 130 hours worth of information, potentially, but we're guessing now based on 125 of the 130 hours. How accurate should we be? So we're trying to guess here. $125 over 130. Okay, we only have 96% of the information, but we're going to try to make a guess based on only knowing 96% of the data. Now, we should be pretty reasonably accurate with 96% of the data. So that's what we're doing, okay? It may move a little, okay? If we make a lower low or we make a higher high, we're going to move the pivots, okay? The other part is the close. So the higher the more the close moves from where it is now, the more it'll move the pivots. So let's say it doesn't make a lower low, but for some reason the Kiwi dollar in the next, between now and the London close skyrockets and ends up way up here. All right, if it does that, it's going to mess with our predictive pivots for next week. But what's the logic of it doing, or what's the probability of it making a full trip from support to resistance in the next 8 hours? I would have to guess pretty low. What are the chances it breaks lower now and makes a new lower low and closes lower? Well, again, that's less likely, but more likely than the other situation. That would move the pivots quite a bit because it's moving the range because we're breaking out, and it's moving the close. So that would open the range and lower the central pivot. Okay? Now, if it doesn't break out but still closes fairly low, then these pivots are not going to move much because it's already predicting based on where we are now and staying within the range. So long story short, the pivots may widen and the central might fall a few pips if we make a lower low and close low. And if we don't do that, they probably won't change at all. And if it completely reverses and we get a giant spike in velocity, which again is extremely unlikely, then they would probably contract. But contracting, I would say, is near zero probability. A lower low and a low close, I would say 30% probability of that. And if so, the consequence of that is this target would move up, this target would move down, and then this central would move down a bit. And then if it just sort of closes in here, which is probably a 70% chance, then nothing is likely to happen. So you're going to have to make your decision. Yes, so we're looking at next week's pivots. That's the key to front running. Okay, so in the swing trading course, I teach you how to front run. Okay, because we already know if you want to be a bear on this dollar, on this Kiwi dollar, you had a chance to sell it at 67.63. You knew that. You already knew that. And it's not that we're at today's setup, we're at next week's setup. So if you sold at 67.63, now, first of all, knowing that is important, right? But here's the interesting thing. If you sold at 67.63, your target's going to be down here. Now you're going to look at next week's target, and then you can see that next week's low, projected low, is also overlapping the conservative target for the month of August based on monthly pivots. So you're going to drop it, you're going to sell it at 67.63, and your target is 66.63. So you're going to make 100 pips. If you get this right, you're going to pick up 100 pips. Okay? And you ready for this? If you were able to do it between now and Tuesday, the whole thing's going to counter trend back up. Oh, snap. So if you sold on Friday and you found yourself here on Tuesday, you know what you're doing the rest of the week on Wednesday and Thursday, and you just planned out your whole entire week. It's Friday. You know what you know today's setup is really next week's trade. So now it's Friday. You're done today. You know you probably have Monday line done. Tuesday, you'll probably hit your target. And if so, Wednesday, you're long into Thursday and next Friday. So you're done all of next week now. Well, you're not really done all of next week. If you get the drop, you pick up 100 pips. Then you get the counter, which is probably another 100 pips. And that whole 100 pips down, 100 pips up will probably take you from today until about Thursday of next week. Done, planned. It's all that information is on this chart. None of this is my opinion. Right? Mozart is the one that writes the notes. I just know how to play the piano. I sit down, the notes are there, and I can play them just like Mozart wanted me. But I didn't write the music. That's not my opinion. That's just there. It's in the matrix. Right? The blonde in the red dress. How do you follow me on? Don't follow me on social networking. Go to Trader's Way, open a demo account. Takes you 30 seconds. And then every single day you can attend my free webinar for clients. Every single day for an hour, I'll help you. And it's not me just like throwing you into trades. It's me teaching you. So it's way better than me tweeting you something. Man, I feel like I have pneumonia. Oh, wait. Hang on, let me see how much time we have. Okay, I made it to 10. I'll tell you what, I need a 1-minute break because I drank about a full pot of coffee to make sure I had enough energy. I need a 1-minute break. I'm just going to put mute. Do I even have the ability to mute? I don't even know if I have an ability to mute. I'll tell you what, I'm going to need a 1 minute, or 1 minute. I need a 30-second break, and then we'll be back, and I'll wrap up the last 30 minutes. And that means I made it through a 3-hour webinar with bronchitis and pneumonia. That's not bad, right? Boom. So give me 30 seconds and BRB, okay? Alrighty. Thank you for your patience. Really? All right. So let's do a couple more. La 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 la. Let's do Swissy pairs. Look at this stuff, isn't it neat? Poor Switzerland, huh? They're getting crushed. Okay, if it makes a low into this area, I might be a buyer. Look at this though, this is just really interesting. It shouldn't go that far. It's not supposed to go that far, but if it did, that'd be very interesting. And that's where we are here. And this is very similar to oil, isn't it? Makes you wonder if oil prices are really correlated to whether Europe is getting its act together or not. Okay, but wouldn't this be a neckline? Okay, so this is the first one I have is here, right? You see I drew it here? Okay, so if you're a pure technician, what this means to you is you don't care about fundamentals, obviously. So you're looking for something like this. Okay, and let's call this the neckline. The way that you do this is you measure the peak to the neckline, and then the break of the neckline gives you the prediction for the new low. So you would trade it the way I just drew it here, and then you trade it down. Okay, that's a pure technician. It doesn't say anything about fundamentals. It doesn't say anything like, perhaps this whole setup occurred because it was summer. But this might be saying Europe has gone another period of time without fixing any of their serious problems, and that the day of reckoning is approaching. So what do you think? We'll do it like that. Does that make sense? What is it, ISM services? If you're a bear, if I were you, I would look for something like this. Okay. La 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 la. If I was a bear, I'd be looking at I'd be looking for something like that. Okay. I guess to start it off correctly, that's the pattern I'd be looking for if I was a bear. Okay. And there's a long ways to go before being a bull. So Jerry says, do you think euro dollar will continue to the previous downtrend? That is what I would look for if I thought the answer to that was yes. Oh, sorry, this one is euro dollar. This doesn't. There you go. Okay. The simple version, I'll just redraw it. Simple version was this. If I was a bear, this is what I would hope for. Okay. My throat is on fire. My throat is on fire. Let us begin. What else have we not looked at in a while? Euro pound? Thank you, Lester. Well, thank you for the little likes on YouTube. Maybe if you can you leave a comment? That also helps FX Street. If you leave a comment on the webinar, if you're on YouTube, that'll help out FX Street. So anyways, Euro Pound. This goes back to the conversation we had an hour ago or something. If you were a bear, this is the obvious place to sell, right here. And if you sold there, you had an opportunity to make money. Okay. And if you're a bull, this is your obvious buy. And I was talking about it like, once you make a decision on your bias, long-term macroeconomics or a roll of the die, I don't even really care. If you know you're a bear, you know where to sell. If you're a bull, you know where to buy. And even if you're wrong on the long-term direction, like a month from now it's a lower low or a month from now it's a higher high, either way, the very least, you probably didn't lose money. And even if you're wrong, there's a very good potential you still made money on the smaller time frames. So you could have sold at 89, right? Or you could have bought at 88.50. And right now we're kind of in the middle. I guess it's not 89, it's 89.30 or 88.50. Right, so if you sold at the top where you were supposed to sell, remember that's a pretty good sell, and that's a pretty good one. If you just kind of did what you were supposed to do, you're probably okay. And that's probably the biggest benefit of truly learning how to trade, is even when you're wrong, you're probably okay. Because you know where the bulls are going to buy, you know where the bears are going to sell, and it's all pretty straightforward. I'm not going to say it's easy, but you're very rarely shocked and surprised. You're like, oh my gosh, look at that. Holy smokes, I didn't see that coming. You can be wrong, but you're very rarely shocked. Look at this one. I don't even remember doing this one. Check this out. Back in January, up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Wow. This was supposed to make another up, right? So if it collapses here, that's going to be valuable information. Check how predictable that is. Yeah, it only went up for 3 months. Down for 3 months, up for 3 months, down for 3 months, up for 3 months, down for 3 months. Wow. Beautiful trading, actually, huh? So what kind of data would you look at to predict how well Aussie's going to do. And for that, you'd look at Chinese import and export data, just Chinese economic data would be a good one. And there's a lot of data that's coming out. Okay. If China's stockpiling, that's going to benefit Australia. If the Chinese economy is picking up, that's going to be benefiting Australia. So, for example, the Chinese yuan had been gaining value at a time when they were buying commodities from around the world to stockpile. See, if the if the currency is strong, then the commodities from other countries are going to be relatively cheaper because your currency buys more per unit of value. Then, magically, as soon as China's done stockpiling foreign commodities like iron ore and coal and soybeans and all these other things, magically, the currency starts devaluing. The government starts devaluing. The central bank starts devaluing the currency. And now we're at something like a multi-year low in the value of the Chinese yuan. Isn't it amazing how it's right at a time when China isn't importing much anymore? Seems to me like they wanted it to be strong so they can buy a bunch of stuff. And as soon as they bought all this stuff, then they weaken it because a weakened currency makes Chinese products more affordable. So one reason we don't have inflation in the United States is that our currency is strong right now, which tends to slow an economy down, but our economy is not slowing down because at the same time our dollar is going up, the Chinese yuan versus everything else is actually falling. So now we can buy more stuff from China for cheap, and then we don't have inflation. Or our economy doesn't slow down. And it's a magic sort of timing where a stronger dollar should, at least for exports, right, slow our economy down. But we're making up for it in other places. Thank you, China. Thank you, China. Look at that, huh? So you really have to say, is this a significant break? It's amazing, huh, how well the euro started 2018. The Eurozone had some really positive economic data. It's all gone now, man. Amazing, huh? FX forecast says Aussie is a major producer of gold. That's actually not technically true. But the gold that Australia produces, and in particular because of or when gold has high prices, its percentage of GDP is quite high. Therefore, it produces a correlation. But I remember, I don't know, 10 or 12 years ago, I did a presentation on gold, I think in New York City. And I went through all the world's producers of gold, right? And like the United States is the largest producer of gold. Most people don't know that. China is one of probably the second largest producer of gold. Most people don't know that. Most people think of like Australia and South Africa and some other places. And you go through and they're like, yeah, they produce a reasonable amount of gold relative to their economy, but nothing close to what like the United States and China does. Like the United States produces way more gold than Australia, but you don't think, oh well, the United States is the largest producer of gold in the world, so therefore gold in the dollar. Well, gold and the dollar, they're actually opposite, but only because of the reserve currency. So then you can say, well, China produces so much gold, right? But again, no, we tend to talk about South Africa and Australia, but it's because the gold they produce relative to their GDP, that percentage is quite high. And in particular, when gold prices are going up, because then an ounce of gold is worth so much more. Like Australia produces way more iron ore and coal than it does gold, right? Way more iron ore and coal, but very few people say, oh man, you should just, iron ore and Australian dollar, they're highly correlated. People talk about gold. So anyways, just be careful. Yeah, Aussie and gold do correlate quite well together, but not because it's it produces a lot. It produces a lot for its economy, right? Like the population of Australia is 25 million. China probably has 25 million gold miners, right? Probably has 25 million people working in gold mines. So they're going to be a much bigger producer than Australia is. You know what I'm talking about? Does anyone know what these black dots are? Maybe we can talk about that. These black dots are parabolic stop and reverses. The way that I think of them is they predict where your stop loss should be. So when you're up here, your stop should be here. PSAR, parabolic stop and reverse. Insert indicator. Where would they be? I don't even know where you put the trend, maybe? Yeah, okay, parabolic stop and reverse. Okay, and just think of them as training wheels. If you bought down here, remember they don't tell you. Well, most people are not trained correctly on how to use PSAR. So most people they buy a course or they buy a book, and some idiot tells them when PSAR drops you should buy, when PSAR pops you should sell. That's very wrong. Very, 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 very wrong. But anyways, it's an easy sales pitch, and an amateur would believe that. Anyways, if you decided to buy for other reasons than PSAR, right? Like this is an obvious bottom, let's say, because of the pivot or whatever. Once you're in the trade, imagine that these dots are simulating based on volatility now. Based on volatility, where your stop should be. Now, the logic in this algorithm is that when you're in a good trade, volatility works for you. Okay? Because it's going in the direction you predicted. So when it's moving quickly, it's supposed to be working for you. Now, if it's aggressively going against you, then you're not in a good trade and you've messed up. But when you're in a good trade, the volatility is going to work for you. And then before any type of reversal, it's going to consolidate and reverse like this. Up quickly, then consolidate, and then collapse, right? That's the logic of PSAR. So you can see here we have quite a bit of volatility where you have this up, this down, this huge spike, and then this down, and this huge move. And over the course of time, from, let's say, this period to this period, let me try to draw this, okay? Over this period of time, from when you entered until now, look at the difference in price. Okay, how should I draw this? I don't know. I guess price moved from here to here, but you see that your stop, relatively speaking, has moved only from here to here. So you have this ginormous move and this volatility against you. The PSR is trying to keep you in the trade because it knows, even though it just dropped a ton, it also spiked a ton, and that it's probably going to take off and continue. In fact, using other methods like price action trading, like Fibonacci trading, this is also a very obvious entry for you to add a second trade. PSR doesn't tell you that, but other things do. So anyways, nonetheless, it starts moving up and up and up and up and up again. But you notice all of a sudden, it's making fewer and fewer higher highs, right? Even in here, fewer and fewer higher highs. So now we're losing volatility because it moves sideways for several days, makes a little high, moves back, and still moves sideways at the same old price. Look at how long we're here. It's the same price for a long time, right? Basically on average. So all of a sudden, the rate that PSAR is moving your stop loss close is significant now. So over this period of time, let's say from this period of time to this period of time, price has changed very little now, right? But look how much the stop has moved. It's almost the opposite. So when price is moving aggressively for you, the stop is hardly ever moved. And you're trying to let your winners run. And then when you start to lose the volatility, it starts jamming your stop and locking in profit is much, much, much more aggressively locking in profit. Because it realizes the longer you move sideways, the more likely it's going to collapse. And then finally, you see this, price comes up and you get a PSR up here. It doesn't mean sell, it means take profit. So if you entered here because of a logical reason, maybe a pivot point or something, PSR doesn't put you in, okay? But PSR helps you manage your stop based on volatility. It's attempting to let your winners run as long as possible. And then when PSR is up here, when it flips from the bottom to the top, that's because you got knocked out for profit and you should be done. What time frame? All time frames, whatever time frame you put PSR on. So it comes down to whether you're scalping, spot trading, swing trading. Okay, what I showed you was daily. Okay. So does this PSR, you see how PSR just put a dot up here? Does that mean you should sell? No, it doesn't. If you had some other reason to sell, it probably was like this, right? You would have sold it days ago, a week ago, okay? So if you're short now, it just kind of feels good. If it makes a lower low, lower high, lower low, it's going to keep you in the trade for a very, very, very long time. Okay, guys? Does that make sense? Parabolic stop and reverse. Yeah. And that's 3 hours. Woo! I made it. I'm telling you, I was very unsure I was going to make it. I went to bed very early yesterday, like 8 o'clock at night, in hopes that I could have the strength to get through today. And I did. So thank you for being patient with me. Thank you to FX Street for being wonderful hosts. Please visit tradersway.com and open a live account today. And in a couple of weeks, I'll do a 5-day day trading workshop for you for free for all clients that have live trading accounts. That means any account with money in it. And if anybody wants a coupon code to save hundreds and hundreds and hundreds of dollars on the all course package at FX Bootcamp, so you can learn how to swing trade and fundamentals and scalp and technicals and all the other things that go into it. Please email me, Wayne at fxbootcamp.com, and I'll create a coupon code in the next couple hours for you. And that's that. So peace on earth. May the pips be with you. May your profits be above average. I hope to see you at Traders Way on Monday as a client at my free webinar. Thanks again, FX Street. Love you. Thank you for your patience, guys. Love you too. Got to jump, babe. It was real.